properties that he bought was this one. Nice little terrace. Back in 1970, he paid $11,000 for this property. Now, when he bought it, his mum said to him, "Fred, what on earth do you think you're doing? How on ever are you going to be able to afford to pay off $11,000? You're going to be the death of me." Well, when he sold it a year later for $12,000 and made $1,000 profit, his mum said to him, "Oh, Fred, you're the smartest boy that I know. I'm so proud of you." So for 40 years, he went on making his mum proud and trading his properties. I tracked those first 3 photographs. And it was sold again in 2001 for $475,000. It was sold again in 2004 for $780,000. When I did this slide in 2010, it was about $900,000 in value. Today, it's worth well over $1 million. Now, people get so hung up on paying off their loans. And I've got a theory about that, and I'll show you in a minute. But had Fred been able to keep this property and keep it neutrally geared, just looking after its own expenses, so its own rates as insurance and you know, the interest on an interest-only basis on the property and management fees, whatever the property actually cost him, okay? If he had enough money coming in from rent to do that, today, had he not sold it, he would have a $1 million property with an $11,000 mortgage on it. Now, see how ridiculous that sounds in today's terms? But it's the same thing today. We go through exactly that same thought process today. And while you're still accumulating and getting to the point where you've replaced your income not once, but 2 or 3, 4 times, I don't think principal reductions in your loans is necessarily the way to go. Now, as I said, I've got a slide coming up on this shortly, and I'll show you why. Just bear with me for a minute. The next 2 properties, this one here, again to 1970, he bought it for $12,000, sold it a week later for $13,000. He was a big-time property investor. Today, that property is worth about $1.5 million. This one here, same thing, 1970, he bought it, $8,200, sold it 2 years later for $9,000. Today, it's worth over $1 million. You know, it's the same story over and again. And I personally have gone through this process as well and, you know, traded properties that I didn't have to sell. Fortunately, it didn't take me 40 years to wake up to the mistake. And it doesn't take you that long either. You can learn from Fred's mistake. I've now got a motto, and that's real wealth comes from accumulation, not trading. But the thing is, you can't accumulate properties or continue to accumulate properties if they give you a negative cash flow, because you cannot afford to service them. So the accumulation then needs to be with properties that are either just looking after themselves or properties that are positively geared. And if you want to fast track your process, if you want to fast track your accumulation of assets and get to that point where you've got income replacement,